Time to focus on earnings, and PNB has delivered robust recoveries in the quarter gone by. What is the outlook when it comes to their asset quality and profit? Let's connect with Atul Kumar Goel, who's the MD and CEO of PNB. Thank you so much for joining us on ET Now. Now, to begin with, your recoveries are elevated around the 1900 crore mark this quarter. What is your full year target for FY23 and what's the outlook for FY24?
If you see the gross NPA number in December 2021, it was 12.88%, which has reduced to 9.76. Similarly, if you see the net NPA number, which was 4.90 in the December 2021, has reduced to 3.3. And PCR has also increased from the 81 to 85%. And quarter by quarter, the recovery number is increasing. In June quarter, it was 7,057 crore rupees, which has increased to 8,500 crores plus in the September. And this time recovery was 6,100. It is not 2,000 which you are getting, 6,100. And if you see the addition also, we have reached such a situation where recovery is more than the addition. Addition in the first quarter was around 6,500 plus, which has reduced to in September quarter less than 6,000 crore rupees, and the December quarter it is around 4,000 crore rupees. So whatever the guidance we have given, last time we have given the guidance for the gross NPA number should be reduced to 9.5% by March 23. We are revising our guidance. Now it will be around 9%. And similarly, the net NPA number, which we have given the guidance for the March 23, it should be around 3.5% because we have already reached 3.3%. So it will be around 3%.
Good morning. So when we go through the fine print, it's pretty clear that the provisions remain elevated, even if you were to compare them with industry peers. Why is that the case, and by when do you see that coming down?
As far as provisioning is concerned, if you see the provisioning in December 2021, it was around 3,654, around 1.97%. If you see the current quarter, the total provision for the NPA was 3,901, which is coming around 1.87%. The provision requirement based on the three parameters. First, what is your fresh addition? What is your aging provision? And in aging provision also, in some of the account, if they have been classified D1, D2 or D3 also, the value of security is also very essential. If value of security is depleting, then you have to make the 100% provision on the unsecured. So this is the main reason. Whatever guidance we are giving, our guidance for the credit cost will be less than 2% for the whole of the year 22-23 and 23-24. It will be around 1.5% for the whole of the financial year.
Okay, but loan growth is something which has been quite impressive for you. You started the year with a guidance of 12% loan growth, but given the fact it's been better than expected, is there a case to be made that you'll be looking at revising your loan growth guidance?
If you see the last quarter, it is 13.43% on Y-to-Y basis. Last time we have given the guidance for the 12%. So we are revising our guidance. It will be around 13 to 14% for the whole of the financial year. Because there is a good demand in the corporate side also. There is a good demand in the RAM sector also. RAM is our focus area. If you see the growth in the retail, Y-to-Y, it is around 32%, out of which housing loan, it is more than 9%.
What about your outlook in corporate? More importantly, a few private banks have suggested that there's a certain mispricing. Is that something that you're seeing as well?
If you see the demand from the corporate, there is 2-3 types of the demand. Point number one, they were having the working capital limit sanction, which they were not utilizing on account of this pandemic, etc. Now they are utilizing also, and there is a demand from the infra sector also. Lot of project is coming for the road. There is very huge demand from the infrastructure side, particularly in the road. And there is a new project is also coming. New project in the steel industry, new project in the cement industry, which was not the phenomenon in the last 2 years on account of the pandemic or the geopolitics problem. So now there is a demand for the expansion also. And another demand is from the NBFC side. because there is a huge demand in the NBFC side also. And so we have taken the exposure in the very good NBFCs also. If you see my total exposure to the NBFC, it is around 1,27,000 crore, and I am happy to share you the 97 or 98% is A and above external rating. So your another question regarding the mispricing, because earlier the interest rate was falling. So they were asking for the lesser rate of interest, but on account of the increase of 225 basis in the repo, which is now hovering around 6.25. So mispricing, as on date, I do not think, and we are charging higher rate of interest where we have given the loan at the lesser rate in the past.
Now, what we've seen is, of course, credit growth across the industry this earnings season. But something that's very much in focus, which is being red flagged by North Block in New Delhi and the RBI on Mint Street, is deposit growth. How quickly do you think PNB can actually bridge ALM?
As far as PNB is concerned, we are having 10,000 branches. And apart from the 10,000 branches, we are having around 22,000 BC channel also, and which we want to increase around 25,000 by the March 2023. Today, we are having the 18 crore customer in our fold. So as far as deposit is concerned, although whatever you are saying, because growth in the advances in the industry is around 17% and the growth in the deposit is around 8 to 9%. Similar trend is in our bank also. If you see the growth in the advances is 13.43%, where the growth in the deposit is around 7.37%. So we do not foresee any problem in the Punjab National Bank, because on account of the very huge base of the 18 crore customer, and we are using the technology also, because now we have provided each and every branch this tab. They are opening the saving bank account with instant saving bank account, and we are also targeting the corporate customer for the current account as well as the salary account of their employees. So I do not find any challenge in the PNB, and we are sitting on the huge SLR also, so which will be used to fund the gap between deposit and the advances.
So that point is taking as far as deposit is concerned, and there is no challenge at PNB, you pointed out. But what about the net interest margins? Because this time around we saw that they were better and higher than 3%. But the question is this number sustainable?
If you see the NIM, which was around 3% December 2021, has improved to 3.2%. So last time we have given the guidance that our NIM will be within the range of the 2.8 to 3%. So considering the change in the interest rate, we are of the view that our NIM should be around 3%. This is our guidance for the current financial year.
Okay, now if you were to go through the, the fine print, it's also very clear that the OPEX is elevated. Why is that the case, and when will it normalize?
The cost to income in the current quarter is increased on account of the provision for the wage revision. We have made around 181 crore rupees for the wage revision, which is due from the November 2023 for 2 months. We have also made a provision of around 79 crore for the PLI, because our operating profit for the first 9 months is more than the 7.5%. And as per Biden settlement, if the operating profit is more than 5%, so employees are entitled for the 5 days PLI. The another reason is because the AS15, which used to be around 500 crore rupees, this time we have made a provision of 1,330, because we have also taken the calculation of the pension and the gratuity liability on account of the wage revision also. But 54% is the cost to income ratio is for the current last quarter only. If you see the 9 months, so it is in the range of the 50%. So for whole of the year, I am giving the guidance cost of income ratio will remain between the 50 and 51%.
Okay, that's good to hear. But let's also talk about the big conglomerate, which wherein we are seeing a lot of pressure on the stocks, and that's the entire Adani group. Now, the street is worried with respect to the exposure that some of the banks has to that particular group. What's your take on that? A, what's the exposure? And secondly, are you at all worried about it?
As far as exposure of the PNB and the Adani is concerned, it is around 7,000 crore rupees. Out of the 7,000 crore rupees, around 6,300 is the funded and around 700 is the non-funded. If you see the outstanding is only 3,500 and investment exposure is only around 40 crore rupees. And this is in the around 9 to 10 companies, and our exposure is based on the cash flow is being generated by all the companies, and they are irregular in the payment as on date.
That is, of course, the big talking point. Earlier, we've heard sources from SBI also talk about the Adani Group and the entire conglomerate's loan exposure. This is now the second largest public sector bank, PNB, on record, on camera, talking about the Adani Group.